The year is 2025. Donald J. Trump is back in the Oval Office. Love him or hate him, one thing is certain. Trump's policies will send shockwaves through the American economy. These seismic shifts will create both opportunities and pitfalls for investors. Are you ready to profit from the Trump effect? This isn't about political endorsements. This is about recognizing the undeniable link between government policy and market movements. Trump's presidency is poised to usher in a new era of economic nationalism with a focus on domestic industries, deregulation, and a strong military presence. Smart investors need to understand these trends and position themselves accordingly. This essay will serve as your guide to navigating the turbulent waters of the Trumpian market. We'll delve into the potential policy changes, analyze their likely impact on various sectors, and provide actionable investment strategies. Remember, knowledge is power. By the time you finish reading, you'll be equipped to make informed investment decisions in the age of Trump. To understand where the opportunities lie in a Trump economy, we need to follow the money. The U.S. government, with its trillions in spending power, is the biggest game in town. Trump's priorities will dictate where those funds are directed, creating winners and losers in the process. One of Trump's signature campaign promises has been a massive increase in infrastructure spending. This means roads, bridges, airports, and possibly even a border wall. Companies involved in construction, engineering, and raw materials stand to benefit significantly. Think Caterpillar for heavy machinery, Vulcan Materials for aggregates, or Jacobs Engineering for project management. Another likely beneficiary is the defense industry. Trump has consistently advocated for a stronger military and a more assertive foreign policy. This translates into increased defense spending, a boon for defense contractors like Lockheed Martin, Boeing, and Northrop Grumman. Remember, government spending is like a giant spotlight, illuminating the sectors poised for growth. By identifying these areas of focus, investors can position themselves to capitalize on the coming wave of government contracts and subsidies. Central to Trump's economic vision is the idea of America First. This translates to a renewed emphasis on domestic manufacturing, bringing jobs back to the U.S. and reducing reliance on foreign imports. While the long-term effectiveness of these policies remains to be seen, they create immediate investment opportunities. Tariffs, a favorite tool in the Trump toolbox, are likely to make a comeback. These tariffs on imports will make American-made goods more competitive, potentially boosting domestic manufacturing. Companies like Steel Dynamics, Nucor, and U.S. Steel could see increased demand for their products. Beyond manufacturing, Trump's focus on security, particularly border security, could benefit private prison companies like GEO Group and Core Civic. These companies have faced criticism in the past, but a Trump administration may prove more amenable to their services. However, it's crucial to acknowledge the potential downsides of protectionist policies. Tariffs can spark trade wars, raising prices for consumers and hurting businesses reliant on global supply chains. Investors need to carefully weigh the risks and rewards before diving into this sector. Trump has repeatedly expressed his desire to reassert American dominance in space. This ambition translates into increased funding for NASA and support for private space companies. For investors, this represents a chance to get in on the ground floor of the next space race. Commercial space exploration is no longer science fiction. Companies like SpaceX, Blue Origin, and Rocket Lab are developing reusable rockets, launching satellites, and even planning missions to Mars. These companies are at the forefront of a technological revolution, and their potential for growth is astronomical. Beyond rocket launches, there's a whole ecosystem of space-related businesses emerging. Satellite manufacturing, data analysis, space tourism, and even asteroid mining are all becoming viable industries. Investors willing to embrace a long-term vision could see their portfolios skyrocket alongside these pioneering companies. Of course, investing in space exploration is not without risk. It's a capital-intensive field with long development timelines. However, for those who dare to dream big, the potential rewards are out of this world. Energy independence, the black gold rush of the 2020s. Trump has been a vocal proponent of American energy independence, particularly when it comes to oil and gas. His administration is likely to roll back regulations, open up federal lands for drilling, and encourage the development of domestic energy resources. This policy shift could be a boon for traditional energy companies like ExxonMobil, Chevron, and ConocoPhillips. These companies have the infrastructure and expertise to ramp up production quickly, capitalizing on increased demand and favorable regulations. However, it's not just about oil and gas anymore. Trump has also expressed support for clean coal technologies and nuclear power. While these industries face their own challenges, government support could breathe new life into these sectors, creating opportunities for investors willing to look beyond renewables. The push for energy independence is likely to be a defining characteristic of the Trump era. Investors who understand the dynamics of this complex market will be well positioned to profit from the coming energy boom. The financial sector riding the wave of deregulation. Trump has made no secret of his desire to roll back regulations on the financial industry. He argues that excessive regulations stifle economic growth and put American businesses at a disadvantage. While the merits of this argument are debatable, the policy direction is clear. Deregulation could lead to a more profitable, albeit potentially riskier, environment for banks and financial institutions. With fewer constraints on their activities, banks could see their lending and investment operations expand, boosting their bottom lines. Investment banks in particular stand to benefit from a wave of mergers and acquisitions. With regulations loosened, companies may be more inclined to engage in M&A activity, creating lucrative fees for the banks that orchestrate these deals. However, it's crucial to remember that deregulation is a double-edged sword. While it can unleash economic activity, it can also increase the risk of financial instability. The 2008 financial crisis serves as a stark reminder of what can happen when regulations are too lax. Section 7. Navigating the risks, volatility, ethics, and long-term vision. Investing in the age of Trump is not for the faint of heart. Market volatility is likely to be a defining feature of his presidency. His unpredictable nature, combined with his penchant for protectionist policies and trade wars, could send shockwaves through global markets. Moreover, investors need to grapple with the ethical implications of their decisions. Profiting from policies like increased defense spending or private prisons may sit uncomfortably with some. It's crucial to align your investment strategy with your personal values. Despite the risks, it's important to maintain a long-term perspective. Short-term market fluctuations are inevitable, but over the long haul, the economy tends to grow. By focusing on fundamentally sound companies and diversifying their portfolios, investors can weather the storms and come out ahead. Actionable strategies, due diligence, and portfolio diversification. So how can investors navigate this complex and potentially volatile landscape? The key is a combination of thorough due diligence and a well-diversified portfolio. Due diligence means doing your homework. Don't blindly follow the hype or rely on any single source of information. Research companies thoroughly, understand their business models, and analyze their financials. Look for companies with strong track records, solid management teams, and a clear path to profitability. Diversification is equally important. Don't put all your eggs in one basket, especially in a volatile market. Spread your investments across different sectors, asset classes, and geographic regions. This will help mitigate risk and protect your portfolio from sudden downturns in any one area. Section 9. The bottom line: informed investment in uncertain times. Investing during a Trump presidency presents both unique opportunities and significant risks. By understanding the potential policy changes, conducting thorough research, and maintaining a long-term perspective, investors can position themselves to profit from the coming economic shifts. Remember, investing is not a get-rich-quick scheme. It requires patience, discipline, and a willingness to adapt to changing circumstances. By staying informed, diversifying your portfolio, and making informed decisions, you can navigate the complexities of the Trumpian market and secure your financial future.